very good morning to Madam and our fellow friends. We are Group 2. Today we are here to present the tutorial 2 topic 4. The member in E2 is Wong Guanyan, Bae Geng Hong, So Lai Sim, Li Yiping, and Norasima Binti Mahathir. Now we will start our presentation.
My name is Sunaisin and my metric number is 270369. Now I'm going to present tutorial 2 topic 4. For the number 1, why might an advertising agency use job costing for an advertising campaign by Proton Berhad, whereas a bank might use process costing to determine the cost of checking account deposits? For the Proton Berhad, it is very specific to that individual client. Job costing enables all the specific aspects of each job to be identified. For the bank, the processing of checking account deposit is similar for many customers. Here, process costing can be used to compute the cost of each checking account deposits. Now for the number 2, describe 3 major source documents used in job costing systems. For the number 1 is job cost sheet. It is the document that tracks the direct and indirect costs associated with a given job. Next is the materials requisition record. It is the documents that contains information about the cost of direct materials used on a specific job and in a specific department. Next is the time ticket. It is the document used by an employee to record hours worked. Now, for the number 3, describe 2 ways in which a house construction company may use job cost information. It is to determine the profitability of individual jobs and to assist in bidding on future jobs. Now, for the number 4, if the company plans to increase promotion expense by 20,000 ringgit, how will that affect the predetermined overhead rate, eventual cost of goods sold? Increasing promotion expenses will not affect predetermined overhead rate and the cost of goods sold. This is because promotion expense is not a manufacturing overhead or the direct cost of producing the goods sold by a company. It is a product cost which are incurred outside the production.
A very good afternoon to Madam and my fellow friends. My name is Becca Wong and my matrix number is 270024. So now I'm going to present my question number 2, tutorial 2. So question 1 asks, what is the amount of direct material issued to production during 2020? So the amount of direct materials issued to production during 2020 is 148,000 ringgit. This is because if we look at the raw materials T account credit side, work in process with the amount 148,000 ringgit. That is the amount of direct material issued to production during the year. Let's move to question 2. Question 2 asks what was the amount of manufacturing overhead allocated to jobs. So in order to solve this question, we have to look into some data first from the question paper there. So you may see in the additional information that the B, manufacturing overhead was allocated at 20 ringgit per direct labor hour. So to calculate the manufacturing overhead, we need to find the details of direct labor hours. So how to find the direct labor hours? Let's look at the additional information A. Direct labor wage rate was 15 ringgit per hour. Okay, but we see in the questions the T account, work in process T account there, they got the amount 285,000 ringgit is the total cost of direct labor. So we can use the direct labor cost divide by the direct labor wage rate to get the actual direct labor hours. So we can use 285,000 ringgit divided by 15 ringgit. We can get 19,000 of direct labor hours. Okay, since we have the direct labor hours information, then we can calculate the amount of manufacturing overhead allocated to jobs. To calculate the overhead applied, we have to use manufacturing overhead allocated times with the actual direct labor hours, which is 20 ringgit times with 19,000 of direct labor hours. Then we will get the total overhead applied, which is 380,000 ringgit. Question 3 asks what was the total cost of jobs completed during 2020? So as you can see in the T account finished goods inventory as shown in the slides there, the debit side of the finished goods inventory work in process, the amount of 705,000 ringgit is the cost of jobs completed in 2020. This is because the amount of 705,000 ringgit is actually transferred from the T account of work in process credit side. As the job had already finished, so they will debit in finished goods inventory debit side of the T account. Therefore, the cost of jobs completed in 2020 is 705,000 ringgit. Question number 4 requires us to calculate the balance of work in process inventory on 31st December 2020. So to calculate the balance of work in process inventory, we have to start our calculation with the beginning of work in process inventory plus with the direct materials, direct labors, overhead applied, and remember to deduct out the jobs that have transferred to finished goods. So at here, we start our calculation with work in process inventory, 1st January 2020, 82,000 ringgit, plus with the direct labor, 285,000 ringgit, direct materials, 148,000 ringgit, overhead applied, 380,000 ringgit. Okay, then we get the total work in process for the period is 895,000 ringgit. Okay, then we deduct out the job that had transferred to finished goods, 705,000 ringgit. Then we get the total work in process inventory at the 31st December 2020 is 190,000 ringgit. Therefore, the balance of work in process inventory on 31st December 2020 is 190,000 ringgit. Question number 5 asks, what was the cost of goods sold before disposition of under or over applied overhead? So to look into the amount of cost of goods sold, we need to look from finished goods inventory T account. Okay. The T account at the credit side there, finished goods inventory T account at the credit side there got cost of goods sold with the amount of 700,000 ringgit. Okay, this 700,000 ringgit will be bring to the T account of cost of goods sold at the debit side, because here is credit side. So when we bring to the cost of goods sold T account, it will located at debit side, and with 700,000 ringgit finished goods inventory. So as you may see at the next slide, you have saw that the finished goods T account at the credit side there, the 700,000 ringgit will be carried to cost of goods sold T account, which is located at the debit side, finished goods inventory with the amount 700,000 ringgit. So the cost of goods sold before disposition of under or over applied overhead is 700,000 ringgit.
Hi everyone, my name is Lee Yiping. My metric number is 270396. So I will continue present the question number 6 for the main question 2. Okay, we are required to determine the under or over applied manufacturing overhead in 2020. We will do like this. We use actual overhead minus overhead applied to get under applied overhead. The actual overhead is Rm 425,000, which shows at the T-form account. Well, overhead applied is Rm 380,000, that calculated at question 2. So as the result, we will get Rm 45,000 as our under applied overhead. It is obviously to see there is under applied overhead because the amount of overhead applied to the job is less than the total amount of overhead actually incurred during the period. Next, question number 7a. Dispose of the under applied manufacturing overhead by using write-off to cost of goods sold. So the under applied overhead Rm 45,000 is added to cost of goods sold since it is costed directly to cost of goods sold. The adjusted overhead is Rm 745,000. So the COGS, cost of goods sold, is increased. Then we will move to question number 7b. Dispose of the under applied manufacturing overhead by distribute among the three accounts based on ending balance in work in process, finished goods, and cost of goods sold. So here is the working to allocate Rm 45,000, the under applied overhead. The ending balance of work in process is taken from here. The way to get this amount is shown in this T-form, or you can refer to question 4, which presented by my friend just now. The ending, so here is the ending balance for finished goods and cost of goods sold. So how to get the percentage? For example, percentage of work in process is used Rm 190,000 divided by the total cost of these three accounts, which is Rm 1 million. Then times 100%, we will get 19%. For finished goods and cost of goods sold also same, the percentage is calculated in the similar method. And then we use the percentage to calculate the amount of under applied overhead allocated to work in process, finished goods, cost of goods sold. As a result, the amount allocated to work in process is Rm 8,550. For finished goods is Rm 4,950. And for the cost of goods sold, allocation of Rm 45,000 for cost of goods sold is Rm 31,500. So next, for question 8, calculate Heibat operating income for 2020 by using approach 7a and b. First of all, we need to adjust our cost of goods sold first, like this. Cost of goods sold before dispositions were added with under applied overhead. Then we use sales revenue minus the adjusted cost of goods sold to get gross margins. Then we minus the marketing and distribution costs. So as the result, we will get the operating income or loss. By using the average, which write off to cost of goods sold, the company get operating loss with 5,000 ringgit Malaysia. So for the others average, which is projections based on ending balance, the company get the operating income for about 8,500 ringgit Malaysia. Okay, so we will go to number 9, question 9. Okay, for question 9, which approach in requirement 7 do you recommend Hebat to use? Explain your answer. In this case, I could like to recommend Hebat company use approach 7B, where the under applied overhead cost is distributed among the 3 accounts based on ending balance in work in process, finished good, and cost of goods sold. Writing off all the under applied manufacturing overhead to cost of goods sold is usually warranted when COGS is large relative to work in process and finished good inventory, and the under allocated manufacturing overhead is immaterial. However, the amount of under applied overhead Rm 45,000 is material. It should porridge to work in process, finished good, and cost of goods sold. It shows better approximate the result if actual cost rate had been used rather than writing off to cost of goods sold methods. Next, the effect on operating income. The write-off to cost of goods sold will lead to an operating loss, while the projections approach shows an operating income of Rm 8,500. Therefore, based on the accurate materialities and the effect on operating income, shows that Hebat is recommended to use approach 7B, which allocate the under applied overhead among the ending balance of work in process, finished good, and cost of goods sold. So we will move to question number 10, what if analysis. Assume that the direct labor wage rate is Rm 13 and 80 cents per hour. Other factors remain unchanged. Repeat the requirement of 7 and 9 and explain clearly your answer for number 9. Okay, according to requirement for 7A, we need to calculate the actual direct labor hours first. Okay, if the direct labor wage rate is 13 and 80 cents ringgit Malaysia per hours, we will get 2,652 direct labor hours. Okay, so we need to calculate overhead apply, then compare and to get the under or over apply overhead. So overhead apply, we use manufacturing overhead allocated times actual direct labor hours. So we get the amount like this. Okay, continue with requirement of 7A. Okay, to calculate under apply overhead, because it is already to see that the overhead apply is less than the amount of actual overhead. So the under apply overhead we get from here is 11,957 ringgit Malaysia. So we write off the under apply overhead to cost of goods sold. Under apply overhead is added to cost of goods sold. Then the adjusted cost of goods sold is become RM 711,957 ringgit Malaysia. Okay, for requirement 8, corrections based on ending balance. Because of the overhead apply have a little bit changes, so for our work in process, for the ending balance of work in process, we also have the a little bit changes, which is become 223 and 43 ringgit Malaysia. So after that, the finished goods and cost of goods sold remain unchanged, and the percentage we need to recalculate, and then we need to allocate the under apply overhead to those 3 accounts. So here is the allocation of 11,957 under apply overhead. So for requirement 8, to calculate the operating income by using 2 different approaches. So first of all, we need to adjust our overhead of goods sold by adding under apply overhead to cost of goods sold before dispositions. So here is the adjusted cost of goods sold for write-off to cost of goods sold method and operations based on ending balance methods. And then we need to use the sales revenue minus the adjusted cost of goods sold to get the gross margins, and minus marketing and distribution costs. So we will get operating income. Okay, for this, in this case, we get both income, operating income for both approach. So after that, we still recommend Hebat company to use approach 7B because this approach give material amount to the manufacturer overhead. Next, the effect on operating income. The write-off to cost of goods sold and the operations operate shows an operating income. However, the operations operation average the highest operating income compared to the write-off to cost of goods sold method. Therefore, accurate materialistic and the effect on operating income shows that Hebat is recommended to allocate the under apply overhead among the ending balance of work in process finished good and cost of goods sold. So I will pass to my friend to present the next question.
Hi, Assalamualaikum and good day to Madam and my fellow friends. My name is Norashima binti Mahadi and my matrix number is 270634. So today I will present the question number 3, which is required 1. Calculate JIP at the end of the May. JIP is job in process. Okay. How to calculate the job in process? We have to total up the beginning JIP balance and direct labor allocated overhead, and then we get the job in process at the end of May. So we have two brands that include in job in process, which is Helber toothpaste and Green Noodles. So the beginning job in process balance for these two is 10,000, which is the labor cost and general overhead costs. And then we also get the direct labor, the total of direct labor for this brand, which is 56,400, and we have to find the allocated overhead. The question says that we can find the allocated overhead from the 150% from direct labor. 150% of 34,000 of direct labor is 51,000, which is allocated overhead for herbal toothpaste, while 150% of 22,400 of direct labor, which is 33,600, is the allocated overhead for Green Noodles. So we have to total up all these costs to get the job in process, which is total up the beginning JIP balance, direct labor, and the allocated overhead. Then we can get the job in process at the end of the May, which is 151,000. So next, required to calculate CCJ at the end of May. Same goes to how we count the JIP. So the brand that include in CCJ is Choco Jar and Lemon Dish Liquid. We already get the beginning JIP balance, which is 45,000 in total, and direct labor is 21,600 in total. So allocated overhead, same goes to JIP. 150% of 16,000 is 24,000, which is the allocated overhead for Choco Jar, and 150% of 5,600 is 8,400, which is the allocated overhead for the Lemon Dish Liquid. So we total up all the costs, which is beginning JIP balance, direct labor, and allocated overhead, which is 45,000 plus 21,600 plus 32,400 equal to 99,000, which is the CCJ at the end of May. Next, required 3, calculate under or over apply overhead at the end of May. So at the question, we are given the actual manufacturing overhead, which is 122,000, minus apply manufacturing overhead, which is 117,000, and we get the under apply overhead, which is 5,000.
Hi everyone, my name is Wang Guanyan, number matric 2699752. Today I'm here to present the question 3 in tutorial 2. 4a, to calculate the ending balance of JIP and CCJ by using under applied overhead is written off CCJ. To get the under applied overhead is written off CCJ, we must use the ending balance before proration plus allocation of 5,000, then get the ending balance after proration. First, we calculate the JIP, which is have 151,000 ringgit in ending balance before operation and 0 ringgit in allocation of 5,000. Then we will get the ending balance after operation, which is Rm 151,000. Then we will calculate the CCJ, which is have 99,000 ringgit in ending balance before operation and get 5,000 ringgit in allocation of Rm 5,000, and total up will get the ending balance after operation, which is 104,000. Total up the JIP and CCJ in ending balance after operation, we will get 255,000 ringgit as shown as the table. 4B, prorated based on ending balance before operation in JIP and CCJ. In this question, we need to calculate the percentage of total ending balance before operation. Let us see step by step how to calculate the percentage of total ending balance before operation. First, JIP in the table, we can see the percentage of total is 60.40%. For this amount, we will take the 151,000 ringgit divided by 250,000 ringgit to get the amount, which is 60.40%. Then for the allocation of 5,000, how to get the amount 3,020 ringgit? The amount, we will take the 5,000 times the total percentage, which is 60.40% in JIP. Then we will get the amount 3,020 ringgit. For the ending balance after operation in JIP, we will take the ending balance before operation plus allocation of 5,000, which is Rm 151,000 plus 3,020 ringgit equal 154 and 20 ringgit in ending balance after operation for JIP. Next, CCJ. We can see on the table the percentage of total for CCJ is 39.60%. How to get this amount? We will use the 99,000 ringgit divided by the 250,000 ringgit. Then we will get the amount 39.60%. Then we can see on the table the allocation of 5,000 for CCJ is Rm 1,980 ringgit. How to get this amount? We will use the 5,000 ringgit times the percentage 39.60%. Then we can get the amount 1,980 ringgit. Then the ending balance after operation for CCJ, we will total the ending balance before operation 99,000 ringgit plus allocation of 5,000, which is 1,980 ringgit. Then get the ending balance after operation, which is Rm 980 ringgit. 4C, prorated based on overhead allocated on May in ending balance of JIP and CCJ before operation. In this question, the percentage of total we will base on the overhead allocated. First, we see the JIP. The percentage of total is 72 and 31%. How to get this amount? We will take the amount Rm 84,600 divided by the total overhead allocated, which is Rm 117,000. Then we will get the amount 72.31%. Then for the allocation of 5,000 in JIP, for this question is Rm 3,650 ringgit. This amount we will use to get this amount. We will use the percentage, which is 72.31% times 5,000. Then we will get the amount, which is Rm 3,650 ringgit. Then the ending balance after proration for JIP in this question is use the 151,000 ringgit in ending balance before proration plus Rm 3,650 ringgit in allocation of 5,000 equal Rm 154,650 ringgit for the ending balance after proration. Next, CCJ. We can see on the table the percentage of total for CCJ is 27.69%, which is we take the overhead allocated for CCJ, which is Rm 32,400 divided by 170,000 ringgit. Then we will get the percentage, which is 27.69%. Then we see on the table the allocation of 5,000 for CCJ is Rm 1,385 ringgit. To get this amount, we will take 5,000 ringgit times 27.69%, which is percent of total for CCJ. Then we will get the amount 1,385 ringgit. For the ending balance after proration for CCJ is Rm 385 ringgit, which is take the 99,000 plus 1,385 ringgit. Then we total up the JIP and CCJ. We will get the parented based on overhead allocated on May in the ending balance of JIP and CCJ after proration, which is 255,000. Now question 5, which is asked which method would you choose and explain, and would you choose depend on whether overhead cost is under allocated or over allocated, and explain it. In this question, I would like to choose the method in 4C, which is proration based on overhead allocated. This is due to proration based on overhead allocated method result in account balance is based on the rate of actual overhead allocated, and proration based on overhead allocated is more accurate than the method written off. The ending balance before proration in CCJ is smaller than JPI. Therefore, the under-applied overhead is material a percent of CCJ. In this case, the method choose will affect reported in operating income. This is because when overhead is under-allocated, the written off to CCJ will result in lower operating income compared to operation and lower tax. Well, the overhead is allocated overhead, then the operation will result in lower operating income and tax. That's all for me. Thank you.